The thing about Bitcoin was it was the most desirable property network in the world, available to a billion people without any middleman, without any gatekeeper, right? Without a regulator. Oh, you have this much Bitcoin, you want to trade it for that truck, you want to do it on a Saturday afternoon in Africa, and maybe a politician in Egypt said it's illegal to buy trucks on a Saturday afternoon, right? If you're a capitalist, you have enough money to live for 10 years without working, you can take a long view. You can actually posit that in 7 years, when the building is finished, that might be a profitable endeavor. If you don't have any capital and if you stop working next week, you don't have any money, and then your kids starve to death, you don't have the luxury of making long-term investments or dreaming about the future. You're never going to build a bridge or a building or a hospital.
Saylor frames these as escape valves, scarce, desirable property that tends to hold value as currency weakens. Then he adds an even more important layer. The smartest investors don't just buy these assets. They often borrow money to buy them. Why? Because that's the classic wealth strategy. If you can borrow at 3% and buy something that appreciates at 8%, you're not just earning the asset's return. You're also effectively shorting the currency. You capture the spread between the asset's appreciation and the currency's cost of capital. Saylor emphasizes this isn't a Bitcoin innovation. It's been the core playbook of wealthy capital allocators for generations. But Bitcoin changes who can do it. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Smart, affluent people had already abandoned the Keynesian. They knew Keynesian economics didn't make any sense for them a long time ago. That's why they bought land. That's why they bought sports teams. That's why they bought art. That's why they bought gold. That's why they bought companies. Right? They bought private equity and public equity. All of those, that's why they bought beachfront property in Palm Beach or the Hamptons or fill in the blank. All of those things are examples of scarce desirable property to escape the Keynesian debasement dilemma. The really smart ones, they don't just buy the property, they borrow money to buy the property. It's like, if I can borrow money at 3% and invest it in an asset appreciating at 8%, I'm not just gaining 8% a year on my capital, I'm actually shorting the currency, and so I'm getting the arbitrage difference. So this is not something we invented with Bitcoin. That's been around for a long, long time.
But has Bitcoin democratized that?
I think Bitcoin perfected it as a digital asset, which meant that it was now possible for a billion people to engage in this trade at the scale of $20. Right, like you can't borrow 100 million pounds to buy a building in London if you're an individual or a taxi cab driver, but you can actually buy $87 worth of Bitcoin off of an iPhone. And so Bitcoin changed the scale of this. It's like you have a building. The property rights of the owner of the building are much higher than the property rights of the person that owns the REIT. And so when you buy the entire building, you have a lot more power than when you buy a share of the building. With Bitcoin, you're able to buy the actual property in quantities $22 at a time or $87, and you are the original property owner. So you have property rights pari passu to the person that owns outright other forms of property. But it's kind of like, you own the Monet painting. That's good. I can take it anywhere in the world. I can borrow against it. I can sell it. I can display it. I can charge people money to look at it. If I offer to sell you 1/1,000,000th share of my Monet painting, you're a limited partner. You're owning a security, right? Not as good. You have no say over what happens with the Monet painting. So the thing about Bitcoin was it was the most desirable property network in the world, available to a billion people without any middleman, without any gatekeeper, right? Without a regulator. Oh, you have this much Bitcoin, you want to trade it for that truck, you want to do it on a Saturday afternoon in Africa, and maybe a politician in Egypt said it's illegal to buy trucks on a Saturday afternoon, right? You can still buy the truck. There's no one in the middle. When you rely upon a currency, you have to get the approval of anywhere from 1 to 6 banks before you can transfer the currency. So, if you're working with a banking network, and that's a challenge. And when you own other forms of securities, there are always securities laws. It's illegal to trade them on Saturday. Why? Just because. It's illegal to trade them at 6 p.m. Why? Because the bankers wanted to go home at 6 p.m. Huh? With Bitcoin, you can do what you want with your property and you can do it where you want. So,
well, isn't it? They could still create laws that make it illegal to transfer Bitcoin, but you still can route around that if you choose to.
It's like,
you can be an anarchist.
Once there's an island in the Mediterranean, they made a law putting a tax on luxury yachts, like 2% of the value of the yacht. And the day before the tax went into effect, there was a marina full of luxury yachts and the economy was booming and everybody's spending a lot of money. And then the day the law went into effect, the marina was empty and the yachts all pulled up anchor and left.
Yeah.
Okay, so that's portable property.
Yeah.
Okay, you can't move a building. The real problem with buildings is they can't run, they can't hide. So when the socialists or the communists take over, the first thing they do is they take your building because they can. And in fact, even in a capitalist nation, let's take the United States, what's the worst possible tax treatment? It's a triple tax treatment on a piece of real estate. We tax you when you sell it. We tax you when you inherit it. And then we tax you just when you hold it. Even if you're just holding it for a year without doing anything, you get taxed on the coming, the going, and the in between, right? There's nothing that's that bad, right?
Saylor argues that real estate often faces triple taxation. You can be taxed when you buy, sell, taxed while you hold, and taxed when it transfers through inheritance. It's valuable, but it is trapped inside a jurisdiction. Bitcoin, by contrast, behaves like digital capital, portable, divisible, and difficult to trap once someone can self-custody it. Even if governments try to restrict it, Saylor suggests individuals can route around those constraints because the network is global and peer-to-peer. This is one reason he considers Bitcoin a fundamentally new kind of property. It combines scarcity with mobility and direct ownership at internet speed.
Bitcoin is digital capital. It is the digital manifestation of economic scarcity. So if you want a functioning economy, right? Actually, if you want a prosperous civilization, there are certain protocols you have to develop. One of them is language protocol. It's conservation of communication or clarity of communication. Can I tell you, that north beyond the mountains, there is a land of plenty? Or can I explain to you that you can eat that vegetable, but this one will kill you? You need a communication protocol, and it needs to be conservative. That is to say, if I tell you that's good, but I really meant bad, and if I tell you this will kill you, but I'm lying to you, the civilization breaks down, right? You have to have communication protocol with integrity. There are many, but whichever one you settle upon, in this case, English, which is what we, for the most part, settle upon, it needs to have integrity. And if you have a protocol with integrity, you can create a civilization, a market, you can cooperate, you can send your kids to school, you can work, you can create things, you can share, you can trade. Then you need a mathematical protocol. I need a way to explain to you that I need 6 inches of steel, not 3 inches of steel, to avoid having the building collapse and kill everybody in it. It needs to be have to have mathematical integrity, right? The conservation of energy there. You need science. Right? You need, for example, enough science to figure out how to create a steel refinery that doesn't explode, right, and burn everybody to death. And if you figure it out, then you can create guns. And if you figure out the guns and you figure out the germs and you figure out the steel, then maybe you're going to actually rule the world. So scientific protocols, language protocols, mathematical protocols, these things matter. But what if you want to be rich? Why would you want to be rich? Well, because if you don't have economic energy stored up, then on the day you lose your job, you starve to death. Or you would like to be able to store enough food so that if you have 1 year of drought, you don't all starve and die. Okay, so you need to be able to store energy. Animals store organic energy via fat. Fat is organic energy and organic battery. If you take away the fat, you're a type 1 diabetic. You go without eating for a week or two and you'll be dead. Societies store economic energy with what we call money. Maybe we call it capital. If you're a capitalist, you have enough money to live for 10 years without working. You can take a long view. You can actually posit that in 7 years, when the building is finished, that might be a profitable endeavor.
It's that once a protocol becomes entrenched, that the network effects and compatibility advantages make it incredibly hard to displace. In that sense, Bitcoin becomes less like a company and more like a global standard, a protocol for value transfer and value storage. And that's the Steelman version of the Bitcoin thesis he's pushing. You're not just betting on a story. You're holding a unit of a monetary protocol with specific properties: scarcity, portability, and settlement finality.
If you don't have any capital and if you stop working next week, you don't have any money, and then your kids starve to death, you don't have the luxury of making long-term investments or dreaming about the future. You're never going to build a bridge or a building or a hospital because you just don't have the excess energy to do it. So why Bitcoin? Well, all civilizations, they have a protocol, and I think the history of civilization is the most powerful ones displace the least powerful ones. This is almost a tautology, right? Who won? Oh, the most powerful nation won. Well, how do you define power? The ability to channel energy. Okay, so why would a nation that was on the gold standard be able to displace a nation on the glass bead standard? Because glass beads are stupid, because you can manufacture 1 billion trillion glass beads and you can buy everything in the country on the glass bead standard, take it all for a nickel, and then you own them. And on the gold is not easy. You cannot manufacture 1 billion trillion ounces of gold, quickly in an afternoon. There is no gold factory. So the nation on the more powerful protocol displaces the least powerful protocol. And it turns out that bow and arrows are better than fist, and bronze is better than wood, and iron is better than bronze, and steel is better than iron, and explosives are better than steel, and cannons trump, masonry. And, if you study what happened in the New World when the Spaniards showed up, the fact that they had explosives and they had gunpowder and they had steel was very helpful. So Bitcoin simply represents the highest form of capital that the human race has yet to discover. We've been on a journey, and gold reached it reached a stable point, and it was the highest form of portable capital for a while. But in the 20th century, gold wasn't fast enough. It was too slow, too heavy. And if you can't move capital back and forth across the ocean 14 times a day, you cannot do high-frequency international trade, right? So gold didn't keep up with the speed of the modern economy. What we wanted was a digital gold that we could actually move back and forth. And so how do you send $10 billion from here to there in an hour? I can't move a building. I can't move land. I can't move $10 billion worth of oil. Doesn't make any sense. I need a very dense, efficient, stable form of capital I can move. Bitcoin was born out of this idea of a peer-to-peer cash system. If you study the history of economics, cash settlement meant that I showed up with a container full of gold bullion or gold coin, and I traded it to you in return for whatever goods you had to sell or for your credit paper. And so the idea of Bitcoin was, how do we settle our differences with something of global universal value? And why did it succeed? because it was the best engineered network to do that, the most secure, the most reliable, the highest integrity one, the hardest one to hack, the one that was hardest to break, something that was stable and robust. It's like, why did Arabic numerals replace Greek or Babylonian or Roman numerals? Because Arabic isn't the first. It just happened to be the best. And when it came along, it totally obliterated all other mathematical systems because it was the most stable and the most rational and the most efficient. Bitcoin has done the same thing in the global capital markets. It's something that everybody can agree on. You can trade it. Yeah, you can peer-to-peer trade it between millions and millions of people. You can trade it on thousands of exchanges. It's got integrity, and it's thermodynamically sound. If you wish to build something that'll last for 100 years, you need to know that it'll be stable for 100 years, and that means the materials in the building can't rust over 100 years, right?
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.